right. Just another conversation about real estate and whatnot. What's up, Ray? How you doing?
Not much, man. Not much. Just wanted to stop by, ask some questions, and really just go over some general information for all the people out there.
That's awesome, man. So if you guys don't know, like Ray Giomi's awesome, man. He's an excellent real estate agent here in Sonoma County. Does all types of transactions, from first-time home buyers to listings, probate, specializes in that as well. So I'm excited to share some information with everyone as well.
Awesome. And, likewise with Jeremy Forcier.
Mm-hmm. Right. Yeah, you got it.
All right, excellent. All right, cool.
We never call each other by our last names.
Yeah, right. It's a little odd, I mean, people don't really go by Mr., whatever, or Mrs.,
Totally.
Whatever these days. It's a first name basis these days,
yeah.
Just always got to make sure you got to get everybody's names right, though, at the end of the day.
Yeah.
Yeah, so, Jeremy's a fantastic lender over at Cross Country Mortgage, does all of Sonoma County, and just overall is an outstanding lender. Always out here teaching me something new every time I see him.
Awesome, man.
So it's fantastic.
Dude, I'm honored to have you here. Like, I'm so glad you reached out because we hadn't connected like for quite some time, and then like I just saw you like crushing it, and I was like, dude, this like he's doing it, man. Like he's doing so good. But you had like some specific questions, like you came in and were like, hey, these are the most questions that I get right now, like for people that are thinking about buying, and even sometimes people that are thinking about selling and buying. So like what are some of those questions that have like been coming up?
I'm glad that you brought that up. So let's just dive right on into it. So, I mean, obviously the number one question everybody wants to always talk about, what are interest rates sitting at these days?
Well, they're really good, relatively speaking. So right now, as of today, this publication, right, interest rates are, depending on your program, are anywhere from 5.75% to 6.9%. Oh, wow. So that sounds like a really wide range, but it's not. There's always going to be a 1% range depending on fees, program, et cetera. But if we're going to keep it really simple, I'd say 6.45 is the national average right now as of today. So that's, over 1% lower than it was literally just 45 days ago.
Yeah, no, I number one thing that everybody always tells me when I talk to people that are thinking about buying their first property is, I just want to wait till interest rates come down.
Right.
And obviously, we're beginning to start to see that, which is always fantastic news. Well, that's going to segue into my next question for you, and that would be, do you think now is the time to be buying if you can afford it, or should you wait in hopes that interest rates might come down lower?
So I like that you set up the context there correctly. So for me, it's like never a wrong time to buy a house. If you're going in with, am I going to live in it?
Yep.
Can I afford the monthly payment? Like if those two things check the box, then it's not a wrong time to buy. The reason being too is that like if you look at whenever anyone has bought a home since it's been tracked back in 1941, if anyone bought in any of those years, right, and then waited 10 years, there was only one 10-year period of time where properties lost value. And that's really why people are so focused on, is this a good time to buy? They're talking about home prices, right? I think that's irrelevant. Like it really comes down to affordability, right? So if you can afford the monthly payments and you're looking to buy, absolutely. It's always really a great time to buy. Now, in the context of like waiting for interest rates to come down, like should you wait if you can buy right now? I think absolutely not. Like you should not wait, because what happens is that rates go down. Consumers haven't caught on to this yet. Like it takes like a few months of interest rates being stably down before people get excited again and new people are like, okay, I'm ready to buy. I'm ready to hop back in. So I think there's a great opportunity right now in a short period of time where rates are 1% lower than they were. That means that you can afford 10% more in purchase price for the same payment that you could like a month and a half ago. And what's going to happen is as rates continue to go down quickly over the next 12 months, then it's going to be flooded with everyone that wants to buy. But home prices, right, most likely when that happens, are going to go up. Because when you have demand like come in really, really, really strong, that even though the rate is going to be lower than it is right now, if the price is 10% higher, you're actually paying the same amount for that house that you could buy today. So I would say don't wait like at all. Like just make sure you have a good plan. Take a look at your finances, talk to someone like me who can help you with that and come up with a great plan to execute, and then just find the right house. Like be aggressive in getting qualified, be patient in finding the right place.
100%. That's something I really try to let people know, especially in the younger generation. And when I say that, I'm talking about people, around my age and a little older. So your late 20s, early to mid 30s.
Yep.
This is going to be the next big generation. It's going to be buying properties, I believe.
Bigger than baby boomers.
Hugely.
From a number standpoint, even.
Yeah.
Like everyone always talks about how the baby boomers like ruined everything in real estate, right? Because
Yeah,
there were so many of them. Well, guess what? Like the segment that you just talked about is literally bigger.
Oh, yeah.
Than the baby boomer segment. So I think that we'll see another run ultimately.
Big time. And at the end of the day, also with how the market is right now too, like what you were saying, it's almost like a double-edged sword if you're going to choose to wait instead of getting ready to purchase now or in the immediate future as well. Because it's just like what you said earlier, once rates do continue to keep going down, it's going to be inflated instantly with just a vast amount of buyers that have all been thinking the same exact thing, which is I'm going to wait until interest rates go down again.
Right.
Now we're all going to come in. Now we're back to maybe not the same bidding wars as aggressive as 2021, 2022, but we're going to go back to something similar, maybe just not as aggressive, but there will be those bidding wars coming back.
Oh, 100%. I mean, it's still going on even now in certain properties that are done, that are 100%, even at the higher rates. It hasn't stopped. So I definitely think that if you're ready to buy and you can afford it, like definitely don't wait.
100%. So the next one would be, what would be the most common loan programs that you're seeing and having to work with right now in today's market? I know we're in that kind of gray area of people are getting ready to dive all back into the market. Now the rates are starting to go down and some people are choosing to wait. What's really the most common loan program you're seeing these days?
Great question. So three common most loan programs that we are seeing on a daily basis is just a good old fashioned traditional 30-year fixed rate mortgage, like Fannie Mae, Freddie Mac. So those, are giant institutions, insurance institutions. Whenever you hear about rates, they're talking about them, right? That makes up about 90% of all purchases in America. And that's definitely the number one loan program, because adjustable rate, those are fixed rate mortgages, by the way. The adjustable rate mortgages haven't really come down. They don't make any sense still because things are weird in the market. So we're not doing much adjustable rate stuff whatsoever. 30-year fixed rate for sure. The second most loan program that we're seeing is FHA, which people think that's just for first-time home buyers. It's totally not.
Absolutely.
Yeah, anyone can get an FHA loan. And sometimes there's some negative myth thoughts around FHA loans, especially with real estate agents. But the reality is it's literally the same as a conventional loan, 99% the same. And the reason why FHA has had such a resurgence is that the mortgage insurance on those have dropped dramatically. So FHA came out and basically cut mortgage insurance in half on those products, so they're way more affordable. The interest rates are also lower right now on those products when you compare them to a conforming loan. So those are the two. And then the number three loan that we're seeing the most of for sure is for investors. It's called a DSCR program. Okay, so all this means is that you can buy an investment property, and let's say that you can't figure out how to qualify, on paper, you're self-employed, you write everything off, whatever it may be, right? Is that as long as the rents on the property are equal to or greater than the mortgage payment that you're going to be paying, you're qualified. So it's a really amazing product, especially for investors, because there's no limit also to how many properties they can buy with the program.
Dang, that's pretty big, actually.
Yeah.
I haven't heard a whole lot of people talk about that one.
Yeah.
It's interesting you bring up the FHA, and then along with the investor program you just spoke about, a big one that a lot of people are starting to ask me about, funny enough, is specifically FHA 203K loans.
Yeah.
What is that, and how exactly does that work?
Sure. So it's funny that we talked about that just for 2 minutes beforehand as well. Is that so FHA 203K loan is just a rehabilitation loan. So think of a construction loan that's not ground up construction. It's just you can take it down to the studs if you really wanted to. But what it does is it allows, whether it's a first time home buyer or any buyer that is going to occupy the property, allows them to buy a property that might be in really, really bad shape and you can't get financing on it. And it allows you to finance all of the upgrades that you want to do to it, all the construction work that you want to do to it. So for example, we have someone right now that is wanting to make an offer on a place for $600,000, right? But there's no electrical in it. It's kind of torn up and tore apart, etc. But with the completed value, of the property, once they fix everything up, is going to be $890,000, right? So it's going to cost about $150,000 to fix up the property to get it into health and safety code.
Okay.
But once that's done, the value is going to be $890,000. So we can lend, the acquisition cost. All you have to put down is 3.5%. Plus closing cost, plus all the construction cost. So a 203K loan is really just a rehab loan, but it's for owner occupieds only. That's the big thing that people need to realize.
Okay.
Investors call me all the time and they're like, hey, we want to get a 203K loan because it's cheap compared to a construction loan,
right.
But you have to buy it as an owner occupied. You have to intend to occupy the property. It is not meant for a flip investor.
Okay, that makes much more sense then, because in my mind, I was thinking, since I'm learning about this program myself and really, figuring out how all the nooks and crannies are on those kind of deals, my first thought was, well, why don't I see more of this from investors?
That's
then?
why.
That makes a lot of sense. All right, that makes much more sense.
Yeah.
Well, that's a big one that a lot of people ask me about. But then another one that a lot of folks will ask me about, especially people that I grew up with. So these people that are now getting married, they're having kids, things like that. They're in their late 20s, early 30s, first-time buyer programs in Sonoma County. Are they feasible, and are they actually worth trying to get at the end of the day?
So down payment assistance, here's what I will say. I think that down payment assistance programs are great. I think that they are not for most people. Okay. So whenever we're talking to a client and they're first-time home buyers, we'll always review down payment assistance programs, to see what is viable for them. But the reality is that for the most part, these are low to moderate income programs. And the loan limits here are higher in Sonoma County, right? So it's like $128,000 or higher is over median income. So you would have to be making like $102,000 is to meet that area low income to purchase a house, which is fine. You're just not going to purchase much, right?
Yeah.
So with the program, now there are separate programs. One I like a lot. There's two, Cal HAFA. Okay, so Cal HFA is a great down payment assistance, first-time homebuyer only program where they will lend you 3.5% for the down payment, and then they will also give you, so you don't have to put any money down, right?
Wow.
No money down. They'll lend you the down payment, and then we'll finance a regular FHA loan. Okay. Now, the reason I love this program is that they actually get it. They get that we live in high cost areas, et cetera. So their income limit personally on that for a household would be a $250,000 annual income.
Wow.
Yeah. Which all of a sudden that opens up doors for a lot of people. Right.
Big time.
Yeah. Because that will allow, that couldn't save maybe because they have kids they're putting through school, whatever it might be. Right. So, and then the second one that I like a lot is called Chenoa. So a Chenoa fund is another down payment assistance program that we do. The reason I like it, once again, is that there's not the same income restrictions.
Okay.
When you live in an expensive place in California, it's really hard when they say if you make over $60,000 a year, you can't get down payment assistance.
Yeah.
It's that's tough, man. It's really, really tough. So those are the two that I like the most. With all that said, I would say that if you can figure out a way, right, to borrow, get a gift for 3% down payment, et cetera, something like that, you're usually going to be better off. The number one issue I see with people wanting down payment assistance is that they haven't been able to save, which is okay. But it's the combination of that they haven't been able to save, and if they buy a house, their payment's going to be $2,000 a month more than their rent.
Yeah.
And that's where I have more of a conversation with the potential client where I'm like, hey, just because I can qualify you for this, right? Have you thought about the fact that you haven't saved any money, right? And your payments are about to go up $2,000 a month. So maybe giving them a simple task or challenge of hey, why don't you save $2,000 a month for the next 3 to 6 months? See what that feels like, because then you're going to know what your mortgage payment is going to feel like 100%. When you own a house. And then guess what? You also just saved a down payment. So there's different ways to look at it, but I'm not against down payment assistance at all. You just have to make sure it's right for the person.
That's fantastic. Yeah, that's actually something that I also try to not beat in people's heads per se, but I really try to inform them how important it is to budget everything out. Not enough people do that. I myself was guilty of this for a very long time, just not budgeting anything I do.
Yep.
But when you're really getting ready to go buy a house, this is more than likely going to be the biggest financial decision that you're going to make in the next 10, 20, maybe even 30 years.
For sure.
And you really need to budget that out. And it's super important, like what you were saying. you need to budget what are you comfortable paying, not what just can you get.
Not what are you qualified for. Like,
Yeah.
and I understand, like, I don't say that with any condescending tone. They don't know, right?
Exactly.
Like home buyers don't know. So they're taught to, hey, what can I get approved for?
Yep.
Right. And I think that's a great starting place from a thought standpoint. The real question, though, is that, hey, that's great. So before we show you what you can max qualify for, what do you think would be a reasonable monthly payment that wouldn't completely stress you out?
Exactly.
Like, that's a great question to ask, because oftentimes you see what I call the opportunity gap, right? Which is like, they say, hey, we want to know what we're max qualified for. Okay, we're qualified to $800,000. Hey, but have you thought about, what do you think you want your max comfortable payment to be?
Exactly.
And they might say something like $2,500.
Yep.
Right. And I'm like, okay, so there's a big gap. That's a difference between like a $300,000 purchase, right, and an $800,000 purchase.
Yeah.
So that I think it's always great. To your point, you're spot on. Like, think about budgeting. Think about like where my money goes every single month and how much I would actually feel comfortable paying.
Exactly. Yeah. With that being said, being that you yourself are a homeowner, what is the biggest
fail?
No.
What's the biggest fail I did? I got
yeah.
plenty of those, dude. So I'm happy to share any of them.
Well, what would be, since you're a homeowner, what would be the biggest thing you wish you knew before you actually bought your first home?
So there's two things, and you just said one of them, which is why I'm going to share two. So number one is that I wish someone taught me budgeting. Like, I wish that the mortgage real estate professional just at least brought it up as a concept, right? Like, I was so excited as a first-time home buyer that I wasn't thinking about budgeting at all. I was like, I can buy a $550,000 house. Like, that's literally all I thought about. So what we just covered and what you asked beforehand, I'd say that would be my number one, is like, have someone like ask you about your money. Money's not a weird thing to talk about unless you make it weird.
Exactly.
Right? Like, so that would be number one. Number two would be, know that like home ownership isn't for everyone. And if you are going to be a homeowner, you have to know that there's other expenses, right, of owning a home too. I would say that was my other biggest shock. And it still is. I just built a house 2 years ago, built my dream house. And I think I'm pretty good at this now. I've done this for 20 years. I still underestimated like the property upkeep cost with this particular property, right? So that's why you don't necessarily want to max out like your approval all the time, because stuff is going to come up when you own a house, and it's great. You get tax benefits, you have equity increases. It's definitely going to help you accumulate wealth. You just have to know that like, hey, if my payment's, $3,000 a month, I might have like $500 a month spread out randomly over a year of stuff I have to do to my property. That would be my number two.
Dang, that's pretty solid. Then I would agree with that 100% for sure. With that being said, let's go to, all right, you've already bought your first house. Now you're thinking about getting investment properties.
Okay.
So what would be the big thing you would advise to somebody looking to get their very first investment property?
Yeah, so I have a really simple equation, okay? And it's as simple as this. Whatever the house would rent for, okay? So if a house would rent for $2,000 a month, all right? You want to multiply that times 0.75. So you're giving the rents like a 25% vacancy factor, all right? So then if you had $2,000 a month of rents estimated, that's $1,500, okay? You don't ever want your monthly payments, your property taxes, insurance, and your mortgage payment to be more than that number. So like if my payment is going to be $1,500 a month or less, and of course you can vary a little bit, you can go a little higher, but this is just like the easy rule. If the payment is going to be $1,500 a month or less, it's a win-win. You'll never lose money on an investment property. Now, the reason why we give it that vacancy factor is that there are things when you're a landlord that you're going to have to fix that come up randomly. A roof like once every 15 years or 20 years or whatever. Well, a roof costs like $25,000.
Yeah.
So you have to take all these things, and you might have, when someone moves out after being in there a year, you might have to touch up with paint and replace carpet. Like there's 2 months of vacancy that you're not taking in rent, right? So if you use just 75% of whatever the market rents are as your max monthly payment from a financing standpoint, you can never lose on investment property.
Dang, see that right there is what is so valuable, especially working with someone like you, somebody that really is open to just giving that kind of wealth of knowledge to people at the end of the day, especially clients, because that's something not a lot of people really talk about at the end of the day is the numbers and the behind the scenes of buying a house.
Totally.
Sure, the media makes it seem like our jobs are just, we're kind of, like used car salesman kind of people, but there's so much on the back end no one really acknowledges. That is just so infinitely important when it comes to investing in properties. Because at the end of the day, even if you're a first-time home buyer, you're investing your money into a property.
100%. Yeah, you're investing your money in the property. So I always want to make sure that people know what they're getting into. Now, are there one-offs that can make sense that don't fit in equations? Of course, right? But it's always good to start with a baseline rule. And then you can go one-offs from there. Like I'll give you an example. Like if, let's say that like a monthly mortgage payment was going to be $3,300 a month, but the rents that they could get from it were only $2,900. Well, you're going to lose $400 a month, right? Like starting month one. But if you're getting that property like $50,000 or $100,000 under value, well, you're $400 a month negative, but you just came into $100,000 of equity. Like you can make sense of things at times, but those are one-offs. So if you start with a baseline, then it's easier to evaluate risk in the one-offs if you're going to work outside of the equation.
That makes sense.
Yeah.
Excellent. So here's a big one that I'm sure you've been asked a million times, primarily from agents, I'm sure. And that is regarding all these new real estate contracts, documents, and laws that have come into effect on August 17th.
Yep.
How has this exactly affected the lending side of things?
Zero. It literally hasn't affected us at all. I mean, zero so far. Could things come up? Maybe. But the reality is that nothing is going to change that much at all. Agents' commissions that are helping buyers have typically always traditionally been paid by the seller. I see that is going to continue. It's just like documented a different way. It's nothing's really changing. Now let's just say that like a seller wasn't offering, a buyer compensation for you to bring a buyer to a property. Well, once again, it's still just negotiated. Like you could just make the price 2.5% higher or 3% higher. That's what they already were doing. So it was like you could still do that and then get compensated, or the borrower could put less money down and just, we could give them more money for a loan standpoint, and then they'd have money to pay directly. There's 500 different ways you could do it. So I honestly see it making no impact at all from a loan standpoint. The only thing that could be an impact, which we haven't figured out yet, which VA specifically is working on, is how is VA, which is for veterans, people that have served in the armed forces, they can put zero down. Right. So when someone's putting zero down, how do they compensate if they don't have the money to pay? That's something that hasn't been worked out yet 100%. But once again, you could just offer the price 2.5%, 3% higher, and then ask for commission credit, right, or compensation credit from the seller. It nets out to be the same. So I see this as a non-issue. I see this as whoever can communicate it the best is going to win, and it is not going to hurt buyers at all.
100% agree. Absolutely. Awesome, man. Well, those are my questions.
Dude, you got through all those?
Yeah.
Dude, you're fantastic, man. Well, I appreciate you like taking the time to put this together for your audience, like, and share with people. Like, it's been really good getting to know you, and I look forward to building even a better relationship.
Yeah.
And here's 3 things that I absolutely love about you. Okay. I love that you are one of the most engaged real estate agents like that I've met in decades. Like, like for real. Like
thank you.
You're welcome, man. Like, I'm serious. You're super, super, super engaged. And that's going to like take you and your clients a long way. People are lucky to work with you. Like, you really know how to take care of them. That brings me to my second thing, is that the way that you communicate, like with me and my team, because we work together, the way that you refer, the way that you're giving people a really clear path, like, is incredible. And it inspires me. It gets me excited again about, someone's trying to grow. Someone's trying to do it a different way. Someone's trying to do it the right way. And the third thing is just your tenacity, man. You have like crazy good work ethic. Anyone that works with you, like, you're going to go above and beyond for them. And you're always going to make sure that they're not just taken care of, that they feel good, but you're going to tell them the truth.
Yeah.
And I love that about you. So thank you so much for being a partner, taking the time to chat with me today. And I look forward to great things.
Well, I really appreciate that coming from you, Jeremy. You know, the biggest thing with you really more than anything is just the amount of knowledge that you provide to people is just so invaluable. And that's something that I really try to push on everybody I work with, which is at the end of the day, everyone, knowledge is power.
Yeah.
Whether that comes to the negotiating table, or you're trying to budget what you're doing, or you're thinking about when should I sell my property and then go into buying, or do some kind of first time with an LLC, whatever it may be. At the end of the day, you need the right people behind you to give you the proper knowledge and guidance to get you to where you need to be on the path of success.
Awesome, man. Well, dude, have a great day, and look forward to doing this again.
Likewise, much appreciated, man.
All right,
have a good
man.
one.
Take care.